In this video, we'll walk through how to use the Scenarios tool to generate, analyze, and compare multiple trade setups side by side. This tool is designed to help you explore different combinations of position size, stop loss, and take profit, while accounting for fees and execution frictions. We'll start from the top and move down the page. First, set the base trading parameters. Choose the trade direction, long or short. Then enter the entry price and leverage. These values apply to all generated scenarios. Before generating anything, set your execution assumptions. Expand the fees and friction section at the top. Here you can configure trading fees, spread, and slippage. All scenarios and results below are calculated using these settings, so this step is important for realistic comparisons. Next, choose how scenarios are generated. Start with strategy presets. You can choose between conservative, aggressive, or swing trader presets. Presets are simply shortcuts that pre-fill common ranges for stops, targets, and risk assumptions. Below that, select the position sizing method. You can size scenarios by risk amount or by quantity. By risk means each scenario risks a fixed dollar amount. By quantity means position size is fixed and risk varies with stop distance. Now define the scenario ranges. If you're sizing by risk, enter a list of dollar risk amounts, separated by commas. If you're sizing by quantity, enter a list of position sizes instead. Next, choose the stop loss and take profit input mode. You can define stops and targets either as points from entry or as exact prices. Both modes stay synchronized, so you can switch at any time. Then define the stop loss distances and take profit distances, also as comma-separated values. The tool will generate all valid combinations from these inputs. Once everything is set, click Generate Grid. This creates the scenario grid. Each row represents one unique scenario, with its own risk, stop distance, target distance, and position size. You can edit any value directly in the grid, or remove individual rows if needed. As scenarios are generated, the results table updates automatically. Now, let's look at the results. For each scenario, you'll see key metrics such as notional size, initial margin, fees at take profit and stop loss, profit and loss at take profit and stop loss, and R multiples. All values are shown net of fees. You can sort the table by any column to quickly identify higher reward setups, lower risk setups, or more efficient trades. Below the table, you'll see aggregated statistics. Break-even win rate shows the minimum win rate needed based on average, R at take profit. Average P&L at take profit and stop loss show typical outcomes across all scenarios. You'll also see best profit, worst profit, average risk, and the share of scenarios with R greater than 1. The best case and worst case panels highlight the single most favorable and least favorable scenarios, including their exact parameters. Next, scroll down to Saved Scenarios and Comparison. You can save the current run, then repeat the process with different assumptions. Once you have multiple saved runs, select 2 or more and click Compare. The comparison view highlights which scenario set performs best across metrics like average R, maximum R, win quality, best profit, and average loss. Finally, you can export the full scenario grid to CSV for further analysis or record keeping. That's the full workflow. You set execution assumptions, define ranges for risk, stops, and targets, generate a scenario grid, and then use the results and comparison tools to choose the trade structure that best fits your strategy before placing a trade.